Good morning, everybody. Welcome to today's episode of Pre-Market Forecast by Blue Collar Trading. Today is Monday, January 27th. Coming to you, it's about 7 a.m. here on the East Coast, and as we can see, markets are gapping down pretty big. It's about a 4%. NASDAQ, is down about 4%. ES down about 2.5% on the futures. Big gap down overnight, and so we're going to dive right into that. So you can see we've got 4 time frames pulled up like normal. We got the daily, the 4-hour, the 30-minute, and the excuse me, the 5-minute. So we're going to zoom in here on each one and just take a look at where we're at contextually so we know what to expect. If you guys were here last week, you'll see that when we were starting to get up into these levels around here, we basically called for a medium term top, sort of like a sideways to down. I think this day right here, the title of the video was sideways to down, and so that's basically what we're expecting. So now we saw the sideways and now we're seeing the down. There's a lot of panic out there. We'll kind of get into that as well, but so here we are contextually. Big gap down. This is looking at the NQ futures. When we zoom out, it's not uncommon, and we've talked about this in previous videos, it's not uncommon. Price, once we start to get out of this, outside of these deviation bands here, this is the +2 band. We can see this comes all the way back from the last 0809 sort of reset. Okay, and we can see this was 2020. This was 2018. This was 2022. You can see these drawdowns, and here we are again. We're above this +2. We know statistically price, it runs out of meat on the bone. Basically, there's no more meat on the bone left to the upside. So those are the times when you get these pullbacks. The news, is going to say, oh, this or that, and tariffs and this or that. But in reality, it's statistically, we are where we are, and the news is just a catalyst or an excuse to point to as to a reason why the markets are doing what they're doing. It's almost like technical analysis. You can kind of predict the news, right? Start to get up here, and you can predict that the news is going to be negative. You start to get down here. So, anyways, let's go into the 4-hour. This 4-hour chart. You can see a few days ago, this is where we said sort of sideways to down. It's exactly what we got, sideways to down. We said this level here, this +1, was going to be the key break right here, this 21,850. I was super tempted to enter a short position Friday afternoon. I should have. I kind of just went against my grain on that. I don't know why I didn't. Normally I would have. My thought actually was, I was like, I'll probably enter that same position Monday morning. But we can see the market didn't really want to wait. Now we are, you don't enter short here. So I kind of missed that move. I anticipated this move, just the timing. It came obviously quite a bit sooner than what I think anybody would have thought. So, but that's the key break point. We can see we were pushing up to this +2. This +1 was the break point on the smaller time frames. We got a speed bump here, and then we're just been cascading down. This is just hedging, and we'll see what happens. But from the top, we're bouncing off the -4 standard deviation. It's the -2, but we've moved 1, 2, 3. We've moved 4 standard deviations from this move here. As far as next support, if this is going to be, if this is the start of a bigger down move, we would expect to come down to somewhere here. We would expect this +1 on this larger time frame to offer some sort of support. So this, 20,000, 19,800. we'll see over the next couple days. We got some news catalysts this week. If we go to the calendar real quick, nothing really today. Tomorrow, durable goods, nothing big. But Wednesday is the FOMC, 2 o'clock. That's going to be the rate decision. Thursday, nothing really too crazy. And then Friday, we've got some PCE. So some news catalysts this week. We'll have to see how those play out. But for now, chart right in front of us, big gap down. Today's forecast potentially is going to be a little bit tricky. We'll look down on some of these smaller time frames. We'll drill down into it. Each one of these levels is going to be a key level to look at. When we have these big downdraft days, we know we're catching some support here on the -2. We're obviously bouncing up now. Question is, where do we go from here? If the market really wants to have a down day, we're already down 4% on the NASDAQ. 7% is the halt levels for the market. So we're already down, gapping more than 50% of what a halt level is. So if we're going to start to see a day like a -7%, we're going to see us stay below these levels, right? So if we start to get above this -1, okay, we'll have to see. Then do we hold that as support? Do we create a higher low? Do we get this sort of V shape? This level here, this 21,500-ish, right? The VWAP from this move here, that's going to be the key level. If this is really going to start into a down move, and it's going to come down to this daily, actually, where were we here? This 4-hour trend. If we really are going to come down to this 20,000 level, 19,700, then we're going to want to hold below this level here. Okay, 21,500. So if we create a lower high like this, and then start to come down, that's when we could see a waterfall, something like that. If we just go directly lower, who knows? Who knows? Today's one of those days where you just got to be careful out there. Look over at the ES real quick, see where we're at. We're not quite as down today. Percentage wise, we're 2.5% on the ES, but you can see over on the daily, we're up there. We're way above the +2, knocking on the door of the +3. We just know that historically price, once it gets up to these levels, it needs a pullback. And so we're going to see if that pullback turns into a crash or where we are. But we're going to make another video on sort of a big term picture, long term, big picture. And we're going to see, why these quote unquote crashes are actually needed for the market to go back up and how they're healthy. Obviously, in the moment, everybody's panicking, all that, but there is a reason, and we're going to go over that. So the local low here on the ES, we can see is this 5,800 level. We're going to want to stay above that. If we start to get below that, that's when we could start to see a pretty decent unwind. If we take a VWAP from this low here, we'll see it's to be expected. We're coming right off of that +2 deviation. So if we start to get below 5,800, we could potentially see a pretty sharp move down to like, right around here, 56-ish. This +1. Typically, we can see a similar move actually here, right? We started to go below the +2, came back, sort of retested it, right? And then that was that significant move from the +2 to the +1 right there. That was the move. So we could be seeing something very similar. We kind of broke it, came back up, retested it to the T, and this could be the start of a very fast move down to this 55, 5600 area here. that's where I think we're headed. We've kind of called for it the last few days, last week, once we got up into these levels, and we're starting to see it now. The question is, if and when we get down here, how do we react? Right? Do we come down? Clearly, we're going to have a VWAP coming off the top, right? We can only start that now, but as we come down, where is the volume positioning going to be once we get down here? Do we then come up, bounce off of that, and then start to come down lower? Those are the questions that we're gonna have to take a look at. So look at the 4 hour. Zoom in on the 4 hour. We can see on the NASDAQ, we had moved 4 standard deviations on the ES from the last FOMC, that is. We went from the +2, speed bump at the +1, and we're just below the actual VWAP. So this line here is going to be pretty important, how we react when the market opens here shortly. If we kind of consolidate sideways and then start to move down, the next target would be this 59.12-ish. And if the market really wants to sell off, it could just start checking these boxes. Next one down is, this 58.40, and then down from there. So you can see it's not really any surprise. This is the +2 that we were just looking at on the daily. We came up, retested it. This is what we were calling for, basically a medium-term top, and we're starting to get the rollover. The support in the near term, we would expect to see down to here, which is this like 5,500 area. We would expect to see some sort of a reaction there. And then if we come up, let's see, if we come down, right, something like that, see what the reaction is. If we start to come up and retest whatever VWAP is coming down off of here, that's when we could really start to see things unwind, and we'll just have to take that as it comes. But I wouldn't be surprised if we really start, if this is a market top for the foreseeable future for the next 6 months or so. We'll just have to see. Let's look at, yeah, I mean, the 30-minute and the 5-minute, we're basically just going straight down. So this is yesterday's. Let's actually do yesterday. So we're gonna go from yesterday. Okay. This is from the market on Friday. We can see we're just holding below this -3. This is just straight down hedging. We're catching a little bit of a bounce, and we're just gonna have to see. It's going to be a volatile day when we're this far stretched out. The moves happen between these bands, right? So if we're going to go up, we're going to go pretty quickly from 59.90 up to whatever this band is. By the time it comes down, it could be 6,030. So we could see very quick moves, but it's going to move between these bands quickly. Right? If we're going to sell off from here, we're going to go pretty quickly from this -2 back down to this -3, so on and so forth. You can see that's where the moves happen. So, tough to give a forecast today. I mean, clearly we're gapping down. I think we are moving to some of these lower prices though, so I think today what we could see at the market open is we see like a little bit of a relief bounce, and everybody hops on board for the V-shaped recovery. But that just creates a lower high, and then we see new lows, and then we see another tear down lower. So the forecast is going to have to be a relief bounce and then to new lows. The question is, does that happen today? Does it happen with the news on Wednesday once we get the catalyst? That's the question. But hard to think that it's just going to go straight down out of the gates, but we'll have to wait and see. We know the levels, we know the points that it's going to move to, and we just have to trade what's in front of us. So size down today is the key. Size down. Wait for these volume triangles. So any move that happens, right, enter as the volume is like coming down. That's when you enter, is on once the volume start to dies out. So wait till the price gets up to a level, watch the volume coming down, and then enter, because that's when the big move is imminent on these like lower volume. That's when you want to enter, when the volume trickles out. Okay. So be smart, be patient today, traders. Big gap down. VIX is spiking. Let's actually take a look at the VIX real quick, see where we're at. This is actually another thing that's slightly concerning, because if we look on the VIX futures here, the market is down further than what the VIX is alluding to. We can see the VIX back here, popped up to like 36, and that was a similar move. It was about 1,000-point gap down, right? We have 1,000-point gap down today, and the VIX is only at like 18. It's only moved like 2 points. That leads me to believe we're under hedged. And sometimes when you're under hedged, that's when you can really start to unwind and get into these situations where hedging takes place, which is just further unwinding to the downside. So it seems to be the markets are down further than what is hedged. So we'll have to take that into consideration. One last thing, let's look at the rates. Rates have been coming over. They have been trickling down. We're still up overall. But rates are starting to come over. So the question is, why that is. We'll have to wait and see. But we know that we are coming out of the longest yield inversion ever, and we know that typically when that happens, markets or some sort of a crisis happens afterwards, some sort of a recession, crisis, whatever you want to call it. Typically that is after the markets uninvert, and we have uninverted. So we'll just have to wait and see. But trade what's in front of us. We know our levels. We know what we're doing. Be smart, be safe, and good luck out there. We'll see you tomorrow morning. Thanks.